Hello everyone, welcome back to this week's Technical Insights. Last week, the US market suffered a pullback as the post-election rally ended. Investors digested the comments from US Fed Chair Jerome Powell, who said last Thursday that the US Central Bank wasn't in a hurry to cut interest rates. He noted that the US economy's strong growth will permit policymakers to take their time as they decide the extent to which they reduce interest rates going forward. Boston Fed President Susan Collins took the caution sentiments further by stating that a rate cut in December is not a certainty. The probability that the FOMC will lower interest rate by 25 basis points next month then dropped to 58% on Friday from the 72% that we saw last Thursday, according to the CME Fed Watch tool. On Friday, the Dow Jones Industrial Average lost 305 points or 0.7% to end at 43,445 points. The S&P 500 index slipped 79 points or 1.32% to close at 5,870 points. The Nasdaq Composite fell the most among the three US indices, dropping 427 points or 2.24% to 18,680 points. The declines in pharmaceutical stocks weigh on the 30 stock Dow Jones Index and the S&P 500, with Moderna down about 7.3%, as President-elect Donald Trump said he planned to nominate vaccine skeptic Robert F. Kennedy Jr. to lead the U.S. Department of Health and Human Services. Despite the S&P Biotech ETF also tumbled more than 5% and posted its worst week since 2020. For the week, the Dow Jones Index decreased 544 points or 1.24%. Broad Index S&P 500 also lost 125 points or 2.08%. Tech-heavy Nasdaq Composite Index was the worst weekly performance among the three US indices, declining 606 points or 3.15%. Apple, Amazon, Facebook Meta Platform, Nvidia, Google Alphabet, Microsoft all tumbled, but Tesla was the exception among the Magnificent Seven, as the shares of the EV giant jumped 3% on Friday. Elon Musk will join a new US Department of Government Efficiency with Donald Trump, where he would drive changes to the US agency across the federal bureaucracy. In Asia, Hong Kong stock closed mixed on Friday as a rebound in Chinese retail sales numbers and a slower decline in home prices failed to impress investors, as worries that the improvement in economic data would end up being a letdown without more fiscal support. The improvement in the economic data had been offset by Beijing's failure to approve more fiscal stimulus to boost consumption and labor market at the legislative meeting last week, as well as the prospect of a trade war or higher tariffs in the wake of the incoming Trump administration. The Hang Seng Index fell 0.05% or 9.4 points to close last Friday's session at 19,426 points. The Hang Seng Tech Index, however, rose by 0.22% or 9.5 points to close at 4,327 points. For the week, the Hong Kong benchmark index dropped 6.28%, the most in a month, while the Hang Seng Index fell 7.29% for the period. Alibaba dropped 0.9% to Hong Kong dollars 87.20 as the e-commerce giant net income for the quarter ending in September dropped 7% year-on-year based on global accounting standards. JD.com fell 1.9% to Hong Kong dollars 132.60 after Goldman Sachs said that its quarterly revenue missed high expectation among some of the investors. On the positive side, NetEase surged 12% to Hong Kong dollars 134 and become the best performer on the Hang Seng Index. Back in Singapore, our STI index closed higher on Friday despite the US Federal Reserve remarks over the unlikelihood of further interest rate cuts going forward. Our benchmark index rose 0.18% or 6.5 points to close at 3,745 points. For the week, the STI is up about 20 points or 0.55%. This is STI's second consecutive winning week, and year-to-date, our STI is now up more than 15%. The STI index was held back by some real estate investment trusts or REITs. CapitaLand Ascendas REIT fell 1.91% or 5 cents to $2.57. This comes after the REIT announced that it will acquire a land parcel in US to develop into a logistic property for dollars 94.8 million. Prime US REIT was down 0.65% as its income available for distribution declined to dollars 8.5 million in the third quarter of the year, from 14.7 million in the year-ago period. The top performer on the STI index last Friday was technology stocks Venture Corp, which jumped 3.06% or 38 cents to $12.79. Last week, Venture Corp bought back about 20,000 shares in the open market on Tuesday for Sing$ 254,000 or about $12.69 a piece, according to a same-day filing with SGX. The company had authorized to buy back around 14.5 million shares under its current mandate and has so far bought back 855,000 shares. DBS last week lowered the target price for Venture to $15.10 from $16.40 while maintaining a buy rating. So for this week's technical analysis, let's look at the top gainer on STI last Friday, Venture Corp. Venture Corp was the top performer on the STI index last Friday. Their share price jumped more than 3% or 38 cents to $12.79. Venture is likely to deliver a flat fourth quarter performance compared to the third quarter as it faces near-term headwinds according to a DBS research report. The technology company third quarter weak results were below expectation despite a seasonally stronger second half. Performance may be weighed by challenges in the life science as well as the test and measurement instrumentation technology segment. So DBS trimmed its 2024 to 2025 earnings forecast by about 16% and lowered its target price for Venture to $15.10 from $16.40 last week. Looking at the charts, you can see that Venture share price has largely been range bound this year, with the low around $13.27 and the year-to-date high at $15.64 on the 1st of August. Since the year-to-date high in August, Venture share price has been on a downtrend in the last 3 months and hit a new year-to-date low at $12.38. With last Friday's 3% jump in the share price, the MACD indicator seems to suggest that the downside momentum is subsiding, but the reading is still largely negative, indicating the presence of downwards pressure on Venture share price right now. The RSI indicator hit a low of 21 points last Thursday, indicating that Venture shares were oversold, and last Friday, the RSI rebounded to the reading of 35. Venture share price has also breached the lower bound of the Bollinger Band, which is the white line that you see here, last Thursday at $12.49. So with the MACD indicator showing negative momentum is still present in Venture share price and the RSI indicating that Venture share price may be oversold right now, there's no hurry to chase the 3% rebound that we saw last Friday. Investors may then use the lower bound of the Bollinger Band, now at $12.49, as a support level to accumulate on Venture shares and target the 20 days moving average, which is the green line that you see here, now at $13.33 as the first resistance level, or to take profit over here. And these are the updates that I have for you this week. I hope you find this information useful. So do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.